Good morning. This is Sakis Paraskevov, Senior Fundamental Analyst at IronFX, bringing you the morning comment for the 28th of April. FOMC, no signals for June. The Fed stood pat yesterday as was widely expected and shied away from giving any hints about its policy path moving forwards. The committee shifted language in its statement to indicate that global risks to the US economy have subsided somewhat since the March meeting, something that caused USD to initially spike higher against its counterparts. However, the dollar quickly reversed and gave back all its gains to trade almost unchanged in the aftermath of the decision, as investors found no signals that the committee is willing to hike rates in June. What's more, officials refrained from including in their statement a balance of risk to the US economy, suggesting that FOMC members are split in how they perceive such risks. This in turn makes it more unlikely that the majority of the committee will agree in June that a hike is appropriate, thereby lowering further the chances for any action at the upcoming gathering. Given that officials reaffirm their data dependency, market focus remains on the incoming US data to determine when the next rate hike may be appropriate. Elsewhere, the Bank of Japan shocked investors by standing pat. Governor Kuroda and co. decided to adopt a more patient stance and monitor the effectiveness of their previous measures. The reluctance to pull the trigger came as a surprise to investors who expected that a strengthening yen, a potential slip into technical recession, and a negative inflation rate would be enough to force policymakers to act again. The bank once again pushed back the date by which it expects to hit its inflation target by approximately half a year, which makes us believe that further easing, or at least speculation of such, remains on the cards in the foreseeable future, especially after the May G7 meeting in Japan. As a result, we expect the yen to strengthen further in the near term as the bank sent a clear signal that it is on hold for now. Few hours before the Bank of Japan, the Reserve Bank of New Zealand also remained on hold, but in the statement accompanying the decision, officials strengthened their verbal guidance for a weaker Kiwi. The bank kept its easing bias in place, citing that the biggest domestic risks relate to weakness in the dairy sector, the recent decline in inflation expectations, and pressures in the housing market. Even though Governor Wheeler reaffirmed the easing bias and essentially jawboned the currency, New Zealand dollar USD surged on the decision on the disappointment of no additional easing. We believe that the biggest determinant of another RBNZ rate cut may be the 2-year inflation expectations print due to be released on the 17th of May, since the latest decline in this indicator was the catalyst for the surprise easing in March. Until then, we expect that the demand for New Zealand dollar USD dollar could remain firm, mainly due to the overall weakness seen in the US dollar. The selling pressure on the Aussie New Zealand dollar cross may also keep Kiwi elevated. As for the indicators today, in Germany, the unemployment rate and the preliminary CPI, both for April, are due to be released. We believe that any potential reaction in euro is likely to come from the CPI rate, which is forecast to have stagnated in April from 0.1% year-on-year previously. As usual, Germany's regional CPIs will be released ahead of the country's overall print. Thus, we will look at the larger regions for guidance on where the headline figure may come in. A decline in the rate could enhance speculation that Eurozone's preliminary CPI due out tomorrow may follow suit. In the US, the first estimate of Q1 GDP is coming out and expectations are for a considerable slowdown. The forecast is supported by the Atlanta Fed GDP Now model, which estimates that the GDP growth was a mere 0.3% in Q1 from 1.4% previously. A variety of key economic indicators have disappointed throughout the quarter, including industrial production, durable goods orders, and retail sales. What's more, the global turmoil at the beginning of the quarter is likely to have weighed on the manufacturing sector and thereby on exports, something that was evident by contractionary readings in most of the manufacturing PMI prints for January and February. The first estimate of the quarterly core PCE deflator is also due to be released. As for the speakers, UK Chancellor of Exchequer George Osborne appears before the Parliament. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade delivered directly to you. Also, follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Sakis Paraskevov, Senior Fundamental Analyst at IronFX, wishing you solid trading.